1, 2, and 3. So I'll create sales account with 3 lakh series. Click on create icon. Sales is primary cost of revenue. That is it's a trading activity. So we do on a daily basis. So select the account group as primary cost of revenue. Click on income because sales is income. So I'm selecting the income group. And now the sales. So usually what business usually do is that they'll always try to differentiate the sales also. That is, for example, if you're doing any domestic sales, you're gonna hit to one GL account. If you are doing any export sales, you're gonna hit to a different GL account. And if you're doing any sales within our intercompany, that's within your company codes, then you will have an intercompany code GL account. So based on that, they'll be creating the different GL accounts. So in our case, I'll say domestic sales account, or you can also say sales account. So it's based on the business requirement. Usually, the GL accounts get created. It would be by default the currency would be INR because we are selling only to our local customers. Sort key, just put 001, posting date, maybe 01. That's it. Oh, no. Click on change. You also have to specify the cost element category because it is it's a revenue. So click on this revenues. For expenses, we always give 01, but for revenues we'll give but for sales rated we always give 11. That is revenues. Click on save. Yeah. So just copy this GL. Go back to our screen. Press enter. Select the GL account that you have just created it. Give the amount. Block for posting. Okay. Where is block for posting? Go and give the profit center. Click on simulate. So the entry is coming like customer is account debit. That is, he is a debtor. So that's the reason customer account is getting debited. Credit is sales. Sales, anything which is income related, we always credit it. So posting key 50 is for credit. So therefore you're saying a minus sign here. Customer account debit to sales. So this is the entry that gets posted when we post our GL accounts. So just click on save. It has posted with document number 2017. 2017. Click on FB03. Just press enter. Yeah, so you can see the entry customer account debit to domestic sales account. So this is how the entry gets posted. So remember we have given the reconciliation account as 100 500. So if I go and check the balance in this GL account 100 500, you'll find 10,000. This is how the reconciliation account works. That is, whenever you post any entry in the subledger accounts, by default, whatever the recon account you have given in the background, the values gets updated in that respective GL account. So we'll just check once. FS10N. FS10 is the transaction code. So if I go back to FS10N, 100, 500, the recon account which I've given, you can see it has posted shown as 10,000. And similarly, if I open my business partner, that is my customer account, FBL5N, if I click on execute, it also shows a 10,000 balance here. At the GL level, because at the backend we have linked this customer to this recon account, it's showing a balance of 10,000. So for any customer, or for whenever we try to post, automatically this recon account gets keep on updating. So this is the importance of reconciliation accounts. At one go, the business can understand what is the total amount due from the customers, and if they want to select, and if they want to know individually what items, what is the total amount due from each of the customers, they will go to FBL5N. So this screen, that is FBL5N screen, and they will understand what is the individual amount that is due from all the customers. And if they want to know at a macro level, that is, then they go to this GL account, Sunrise Data's account, and they will be able to find this. And this GL account is used in our financial statement version, that is FSV. That is, in this will show that it's total amount due from customers as whatever the balance this GL account shows. So this we report in our balance sheet, this GL account 100, 500, and we tell, and in balance sheet we tell that total amount due from customer is 10,000. So that is the importance of this recon account. So in vendors we use FBL1N, but but for customers we use FBL5N. FBL5N. So just remember, FBL1N is for FBL1N is for your vendors, but if you want to check for your customers, the transaction code is FBL5N. This is for FBL5N, and if you want to check for GL, it is FBL3N. These are the regular transaction codes which we use to check the balances or to do some analysis. So 1N, 3N, and 5N. Just 1 is for vendors, 3 is for GL, and 5 is for 5 is for customers. So this is how you'll be posting the transactions. So we just saw how we can post using FB70. We'll try to post a similar transaction using F-22. F-20 is also the same thing, and this is again used
Sir,
if you are
FBL1N is for what, sir?
FBL1
FBL1N
is
is for?
FBL1 is for vendors, vendor line item display. So that is when we did our AP module, we were using this to check what is the open items, clear items, and all items for respective vendors. So for vendors, it's FBL1N. 3N is for India. 3N is for GL, and FBL5N is for customers. Remember this transaction because whenever we get an issues more if we relating to customers or vendors, usually we come and check first the issue here itself, which will give you a better understanding, and then you'll try to do analysis. So even the business, if they want to understand what is the total amount due for a specific customer or a vendor or a GL, they come to this screen only, and then they will do some analysis, or to do any reporting also they will be using this transaction code only. So we'll see now how we can process an invoice using F-22. The only difference between FB70 and F-22 is that here we have to enter the posting keys. So posting key 01 is nothing but customer debit. If I click on here, you can see C is for customer and debit and credit indicator. So D is for debit. So customer will get debited if you use posting key 01. And if I go further down, 40 is GL debit and 50 is GL credit. So that's the reason I'm selecting 50, that is for sales account, because sales is a credit entry. So therefore I'm crediting GL using posting key 50. And usually whenever posting expenses, I was using 40 as the 40 as the posting key. If you don't want to enter the posting keys, I mean, the other option is that you select FB60 and FB70, because there you only select the debit and credit indicator and you don't have to enter the posting keys. So it's left to you which one you are comfortable. You can use that. But business usually uses FB60 or FB70. But this is also an option which they can use it for processing their invoices. Same thing. Document date is nothing but your invoice date, that is the invoice date which is mentioned on the screen. DR is the usual document type which we use to post all our FI related invoice. If I click on here, if I set DR, you can see SAP is by SAP has defaulted a document of DR for F-22. So you always, we most of the time we always use what SAP has delivered it, DR. So DR is the transaction that we use for customer invoices. Just give the posting date. Based on the posting date, the period gets determined. Currency, you can give some reference. That is, this is called as invoice number in the reference field. Come down. 01 is customer debit. Select any of the customers. Give the amount. 50 is credit. We have debited our customer. Give the profit center. Click on simulate and save. So this is how we can post it. It's just similar to what we did in accounts payable module. They were there. We're posting the vendor invoices. Here we're just posting the customer invoice. But apart from that, there's no difference in the screens. I mean, there's only difference in the transaction. That was vendor transaction, and this is a customer invoice. But apart from that, there's not much change. So in vendor invoices, we didn't see the credit memo. So we'll see that credit memo scenario. I mean, it's just a transaction. Just we'll try to understand what is actually credit memo, and then we will take. Well, then we'll then let me then we'll try to post a credit memo. Let me open an Excel. So I think in couple in just few days back, when I mean someone from the team they asked me how we got an FI invoice, and if the customer is not we have sold something and then he wanted to return it, then what is the usual process? So in SAP, what we do is that let's take an example. So I have done an invoicing for customer A for 10,000. This is only for FI invoices. Don't link up with SD. When we do the SD module, when the integration SD, we'll see that part later. So just let's work on only the what you call the FI related invoices. For FI related invoices, we usually don't have any goods receipt. That is, we don't get any materials. It's only for day-to-day purchases. I mean, small amount purchases. We use this FI invoices. So here we don't have the materials part. So let's say that you did I mean you ordered some materials from. I mean you ordered some. We have sold some in. I mean we sold an invoice to our customer for 10,000, and later he found that it is there's some defective. uh, um, okay, let's do this. So this is invoice for 10,000, and he has paid that amount also. Okay, the balance is 0. But later he says that no, I should not be paying 10,000. As per the contract, I should be paying only 9,900, or say 9,000 only. And he says that you are due. I mean, I should be only paying I should be only paying 9,000. Minute. And there's a thousand due from this customer. We have to make a payment of 1,000 rupees. So balance. It usually happens. 1,000. That is, we do some sales to customers. They also paid, but later they come back saying that the as per the contract that we have entered, you have charged a higher price, and for this you have to give me credit. Or they might say that whatever the goods you have sold, those were defective, and we are returning it back to you. Then issue a credit note. So since we are not linking with materials, since I'm not did the FISD integration, I'm taking it as this way. That is, We had an invoice for 10,000. He paid it. Balance was zero. But later the customer comes back saying that he will say that I was charged high. I mean, I was charged at a higher note. I should be only charged for 9,000, but I have paid it 1,000. Just give me a credit of 1,000, or if you refund me the 1,000 rupees. So there will be two scenarios. What would happen is that for this balance 1,000, either we will issue a check, that is we'll say that okay, we'll issue a check for 1,000, or what we'll say that we will adjust this 1,000 in your future invoices. For example, if it's a regular customer, we'll say that okay, we'll issue a credit for your 1,000 rupees, and later once the invoices comes, later when your future invoices comes, I will knock off this 1,000 against your future invoices. So in most of the cases, we will not be issuing check. We always whatever the credit note or the debit note raised, we try to adjust it against the future invoices. So just remember that we don't will not be, I mean, in case of vendors also. So in case of vendors also, if we'll be issuing either credit note or debit note, and that note be adjusted against my future invoices, either the future vendor invoices or the future customer invoices. And if the business says that, I mean, if the vendor says that I will not be doing any business for going for, I mean, further, then we will be issuing a check to him. I mean, if some amount is due to him, we'll be issuing check. And similarly for customer also, if we don't do any further business with them, then we'll issue a check for that. Otherwise, we'll always try to settle these differences through credit note or debit note. So in this case, what we'll do is we'll issue the same thing. That is, we did the invoicing part. We'll get the amount from the customer. The balance would be zero, and then I will issue a credit note saying that for 1,000. So how we do that? We'll try to see in the system. Just remember, I mean, in SAP, we usually don't give the check for the debit or the credit note unless that is the last transaction with that vendor for that customer. Otherwise, it always gets adjusted against my future invoices. So let's see that. We'll also see how we can settle it. So first we'll see the scenario, and then we'll try to settle another scenario with 1,000 against the future invoices. So in this case, um, the scenario is that I mean, this guy has paid, this customer has, we have done a sales of 10,000. Let me go back to FBL 1N, FBL 5N slash N FBL 5N. So here in this case, so we have, there's a total amount due is 11,000. What I will do is I will get an amount of 10,000 from this customer. The transaction code is F-28. There we used to use F-53 for payment. Here we use F-28 for customer assets. If I go back here and I select F-28, see it says post incoming payments. So incoming payments is nothing that on due date the customer will make payments to us. So in case if you have received payments, we will be using this transaction code F-28 to account that payment. So what I will do, I will give date as to 12. DZ by default will come. DZ is nothing but customer payment. If you go here, it says customer payment. So customer payment is the DZ. Give the account again from in which you will getting the cash. So I'll be selecting 1,000, that is cash in hand account amount. So in the first case we are getting 10,000. So I'll say 10,000. Give some description and select the account. I mean, from which customer you're getting the funds. So I'm saying I'm getting the amount from this customer. So if you remember, when we're doing F-53, here the contact account type was K. K is for vendors and D is for customers. So if I open one more screen, uh, why is happening? If I open one more screen, F-53, F-53 was used for outgoing payments. You can see K was there. K is for vendors, post outgoing payments, and this is post incoming payments. So incoming payments is nothing but vendor from our customers will get. So therefore, by default, account type is D. Click on process open items. So open items are nothing but it will show you the invoices which are due for this customer. So we have two invoices, 10 and 11. So I'm saying that, and you can see this non not assigned is 1000 because we have entered amount as 10,000, and we can see this is assigned to two invoices. So therefore it's coming as 11. So so select the invoice which against which you don't want to apply. Double click on it. Now you can see this 10,000 and 10,000. The balance is zero. So the payment of 10,000 I want to apply is against the invoice number 2017. That is reference number test one. Therefore, I have deselected the other line and the amount now doesn't become as zero. Click on the simulate icon, document overview. Go to document, simulate. So cash in hand is debit, that is you are getting the cash. Therefore, GL account 40 is coming. Customer is getting credited. So he is paying. Initially he was debited. Now this customer is getting credited. So you can see a minus symbol also. Click on save. Document got posted. If I go and refresh this item, if I go and refresh this customer item, you can see only one item is open and the other item is paid. And if I click on cleared items, same thing you'll able to see that this invoice was there and it has been cleared by using DZ document type and based on this clearing. So we had the invoice for 10,000 and we got a payment of 10,000 and this was knocked off and this item is cleared. So we're using this document type 3005. And similarly, if I check my GL balances, if I click again refresh is there. No, it's not there. You can see now the balance is only 1,000. There was a debit of 10,000. There was a debit of 11,000. That is two invoices. Then I got a credit of 10,000. That's the payment. And the balance is 1,000. So this 1,000 is matching with my FBL 5N balance. See, if I go back again here, open items, it's showing a balance of 1,000. And as per this GL also, the balance is 1,000 only. So we'll try now. We'll go to our scenario. So he said that. So we did the invoicing. He also paid us 1,000, and later he came back saying that I should be only paying 1,000, and you should be issuing credit note. So what we do is that if everything is fine, the sales team will check. Then they will find that yes, the customer is correct, and we have to issue a credit note to that customer. So what we do, we will post a credit note to the customer, and how we do. Transaction code is F dash. Just give me a minute. Accounting, financial accounting, account receivable, document entry. Either you can use FB75 also for this, or you can use credit mode general F-27. We'll use FB75. So here you can see this credit mode transactions coming. For invoicing, it will always come invoice. For if G is for credit memo. So if you want to post invoice, you'll select as invoice. But if you want to post credit memo, you have to select the bottom one, G credit memo. Again, give the customer 4200. Give the document date. Give the reference number. So it says that in company code T001, the number in 16 is missing. The number in 16 is missing. So we'll see why it's, for what document type the 16 is maintained. What you can do is that click on this editing option. Here said document type is hidden. So I will say that I want to see the document type. Click on display. Just come down. Let me go back again. /n FB75. So DG is the document type. So by default, so initially, this is again end user setting. If you don't want the business to see the document type, just click on this editing option. It's taking some time. So what? So if you select this editing option, you can hide this document type. So initially it was hidden. So here you can see this document option. If you want to display, you can, or if you can put ready for input also. If you put it ready for input, you can change the document type. Or if you say hidden, document type hidden, it will not be available. It will not be available in the screen. It will be hidden. So if I go again back to FB75, FB75. It's taking a minute. Yeah. Now you will not be able to see this document type. So it's again, if you want to enable the document type field, you can come and check the settings here, editing options.
Sir,
So
what is this used for, sir? What is this document type for credit to be?
document type is see what system is telling that for which you have, if you want to post a credit note. So DG is the standard document type given by SAP. So usually we have an option that if you don't want the business users to view this document or enable or change this document, you can always go. If I select this editing options, I have hidden this document type. You're not able to see it, right? I mean, you can just enter the transactions, but the business user don't have to select the document type. But if you want the business users also to see to enable to edit them, you can come and do the changes. You can either display it, or you can put it as ready for input. See here, the document type is hidden. But if you select this option, the document type would be hidden. You will not be able, the business user will not be able to see the document type. But if you select displayed, he'll be able to see the document type, but he will not able to change it. But if you select the second option, document type ready for input, he will be able to change the document type. So I mean, this is the option which is given by SAP. You can use the required change. I mean, you can use either hidden, displayed, or input, whatever you want. But in most of the cases, it will be displayed or be input, because the business should also understand it. Or else, if the number range is maintained, we always use document type hidden, so that he can just enter the transaction, and he doesn't have to bother about what is the document type. But if you select the option which is given, based on that option, the screen would come. I mean, if you select the type document type as hidden, the document field would not be available for the business user. So, if, for example, you can see I have used the document type option as hidden. If I, okay, let it come. It's just an I mean, it's just an option given by SAP. I mean, you can control this. And so I thought, since we are doing, I will just show you this also. Become, if it is hidden, the business user will just key the invoice. He will not an option to change the document type. That's it. I mean, nothing else. If I go back here, it got saved. It's already saved. Mm. Mhm. Yeah. Now you see this document type field is hidden. So if you want to control that, this is the editing option. You can use it. So in our case, the document, so system is giving a message in company code T07, 16 is missing. So 16 is for document type DG. We'll just see that also. I will go to OBS7. OBS7 is the transaction code for seeing the document type. If I go to OBS 7, why it is slow all this time? It's taking so much time. I think today's system is slow. It's taking some time, but yeah. Yeah, no. It shouldn't take this much time to open one transaction. But yeah, it is fast at my home also. So the document type is DG. So select DG and click on this. So therefore, the system is throwing this error message 16 is not maintained. So we'll go and maintain that number range for this document type, and the transaction code is FBN1. Go to FBN1. Give FBN1 is nothing but a transaction code to maintain the number ranges. So go to FBN1. Give the your company code T001. Click on intervals. Click on insert. Give 16. Give 999. It's 7,000. Last number is 7,099. I will give 8,000 to 899. Just click on save. Again, number ranges are not transportable, so we will be doing this activity in each and every client. Just remember that, because that's the usual question that they will be asking in interview. So that will,
Sir, client means the development client,
yeah,
quality client,
development client, your quality client, your production client.
production. Okay.
Just remember that. Yeah, it's come. Yeah. So now it is saved. I'll go back to FB75, and try to post it. The credit memo. So what? So 1,000 rupees. I have to post a credit note. So what I'll do? I'll select my customer. Give my customer as F42001. Give the date. Give the reference. The amount is 1,000. Give the GL account. So he's saying that I've been charged extra. So what? So I'll be again selecting my sales account and just see what would be the entry. Where is sales? 3 lakh. Yeah. 1,000. and give the profit center. Click on simulate. So now 40 is he told that we have been charged extra, therefore I'm debiting my sales account. That initially usually sales accounts are always credited, but since he's saying that I have been charged extra, so I have shown my sales extra. I mean sales I have shown in my invoicing entry, I have shown my sales value by 1000 extra. Therefore I'm debiting my sales account and I'm crediting my customer 1000 rupees. So just it will gonna do this entry. So whenever you post any credit memo, your expense your sales account will get debited by what are by I mean it we have in the, so it means that initially when we did the invoicing we have shown our sales figure by 1000 extra by is extra. Therefore I'm now reducing it. So how we can reduce? If I post 40 it means debit, so I'll be reducing it. And initially when I did the invoicing I've debited my customer 1000 extra, so I have to reduce it. So therefore I'm crediting my customer. So you can see the credited entry 11 is customer credit posting key, and you can also see the value the amount is 1000. So the entry is that customer is getting credited and my sales account is getting debited. Just click on save. Now another credit entry got posted. Go back to your customer line items, just click on refresh and see the balance. Initially it was 1000 and now you'll see what is the balance. It says 1000. I mean, so I have invoice which if a new invoice for 1000, and there's also a credit note. DG is the credit note, and this is for 1000. And you can see the balance is zero. So so now the balance is zero. What I will try to do is that I will try to knock off this invoice, that is 2018. That's the new invoice of 1000 against this credit memo. So what I told the business that the customer told that whatever the credit note is there, I will try to adjust against your future invoices. So I have an invoice against which this credit note can be applied. So what I will do, I will go to transaction. You're able to understand, right? This scenario. What I'm trying to do, um, the credit note part. So initially we had an invoice. He paid the entire amount, so the balance was zero. And later he told that I should be only charged 9,000 and not 1000, no, not 10,000. So therefore we have created a credit note of 1000. So this is this entry, this credit note entry, and I want to settle this credit note against my future invoice. So there's already an invoice which is due, but so what I will do is that the customer will not make any payment for this invoice. Whatever the value is there, whatever this credit note is there, it will be adjusted against this invoice. So what I'm trying to do is that now I will settle this. I will knock off this credit note against this invoice, open invoice. So this is how the business
So,
usually does it.
so document number 2018 is what, sir?
This is the invoice, right? You can see DR. Initially, we posted two invoices, if you remember.
Yes.
Customer debit,
Okay, out of
customer account debit to sales. This is the first, and this is the invoice that we posted it. One we posted using F dash FB60, FB70, and other was using F dash 22. So this is the other entry.
okay, okay, sir.
Okay, you can also see here if you click on document header, it will tell you. I mean, showing FB01, but it's usually usually F dash F dash 22 we have used it. So if just go back here. So now you can see that we have a credit note of 1000 and we also have an invoice which for 1000. So what I will do, so the customer will not make any payment 1000 because there's already a credit note, and you can see the balance is also zero. So what business usually does it, they knock off this credit note against the open invoice. And how do they do that? They do it using transaction code F-32. If I open one more screen, if I go to F-32, see clear customer header data. So here we try to clear the open items where the positive and negative values matches. For example, if I give my value, if I give my account number here, the customer account number 42001, and if I click on process open items, you can see there's a credit note of 1000 and there's an invoice of 1000, and you can see the balance is zero. That is, I can knock off this invoice. I can knock off this 2018 document number 2018, which is 1000, against my credit note of 1000. You can see the balance is zero because 1000 positive and 1000 negative. So I can knock it off. So in order to knock it off, I have to use some transaction code. The transaction code is F-32. Clear customer process open items. So the business would come to this place, to this transaction code, and they will select the positive and the negative values. I mean, which can be knocked it off. And you can see the not assigned value is zero. That is, we have 1000 invoice and 1000 credit note. So I can knock off this and just click on simulate document, simulate, and save. That's it. And now if I click on refresh, there will be nothing. No item selected. If I go back here, sorry, FBL FBL file, FBL file. If I click on clear items, you can see for DR invoice 10,000 we got a payment, but for DR invoice of 1000 we have knocked it off against DG, that is credit against credit memo. We have knocked it off, and how I can say based on this document type. So here we use DG as the document type for clearing, and DG is for credit note. And here we use DG as a credit note for clearing, and here we use DZ, that is DZ is nothing but customer receipt for clearing. So this is how the business users will do the clearing. So credit note will always be adjusted against our future invoices. I mean, so or what he will do, if we have invoice for more than that value, he will pay only on the balance amount, and he will ask us to knock it off against the balance. I mean, the credit amount and the invoice amount against that. That is, in this case, the thousand was coming. We can take this scenario. So initially the invoice was 1,000. He paid us 10,000, and later he says that I should be billed only 8,000. And I have one invoice for 1,000. That is, there's another future invoice of 1,000. 10,000 minus 8,000. So 2,000 is the amount that we have to issue a credit note. So have invoice for 2,500. In this case, what customer would say that I have invoice, I mean, knock off this 2,000 against this invoice and will make a payment of 500. So this scenario will also come. So in this case, we had the option, that is whatever the credit memo we adjusted against the full invoice. But we might also have a scenario wherein the I mean uh, wherein the difference will be adjusted against proportionately. For example, here the credit notice was 2,000 rupees. So what business saying? I have an open invoice of 2,500. Adjust adjust this credit note of 2,000 rupees against this, and I will make a payment of 500. So this also scenario might come. So based on that, you will be the business would be knocking it off. Just remember, credit notes. I mean, whenever there's a price difference or there's a quantity difference, for any reason, we'll not be making a payment to the customer. We always create a credit note, and that credit note be adjusted against the future invoices. So just remember this part. So credit note is the credit notes always comes into the picture, but just to post some pricing difference or quantity difference values. Where the customer does not agree with the invoice amount, he will be raising a credit note against those specific values. Any questions on credit notes before we move further? Are you able to follow what I did it, or if you have any questions?
Trying to
Yes,
follow, sir, but can you explain this scenario, sir? This 500 wala?
Okay,
Once again, please.
we'll do one thing. We'll try to post an invoice with 2500. Let me use FB70. So yeah, this is my customer test 2. This is how the business does the clearing. For example, we'll take the same example. Let me do this whole thing and then we will do it. So initially the invoice was for 10,000. I'll make an invoice for 10,000. Go to sales account, give the value, click on simulate. So the entry is customer account debit to sales account. Sales, we did it. Now we are getting a payment also. Slash n f dash 28. That is the transaction. F dash 28 is the transaction code to get the receipt from the customers. You can say post incoming payments. So 212. Click on process. So we had the invoice for 10,000. He's making a payment of 10,000. So just click on simulate, cash in hand, simulate. So customer is paying. So customer initially was debited. Now he's getting credited. Cash in hand, cash is coming in into our bank accounts. Therefore, I'm debiting it. So 40 is the debit key and 50 is the credit. So I've just cleared it. So so customer, we raised an invoice for 10,000. He made a payment of 10,000. The balance is 0. That is 10,000 minus 10,000. So the balance is 0. Later the customer comes says that I should be only billed for 8,000. So I should get a credit of 2,000. So what we do, we issue a credit note to the customer. And how we do that? We use transaction code FB75. If I go back to here, FB75, this is the credit note screen. I will come here. I will I will give that same date, everything. For I will say 2000. Click on simulate. So what customer is saying that I should get a credit. So therefore, customer is getting credited. You can see a minus symbol. And in my previous case, unnecessarily I've shown the value. I have increased my sales value by 2,000. So I'm reducing it. How I can reduce? By using the posting key 40. So 40 is, and just click on save. So now when I go back and see my customer balance, FBL5N, click on execute. It shows a credit, that is, it shows that we are this customer, for this customer, BBB customer, we have to make a payment, not this customer has to do the payment, because it shows the value of minus. Whenever it shows minus, it means we have to make a payment. I mean, the company has to make a payment of 2,000 rupees. So what we'll do is that, till now this is fine, right? 2,000 difference. So till now you're able to understand, right? This scenario which we're trying to do.
yes, sir.
Yeah. So now what I will do, he will issue a new invoice of 2,500. So the customer has issued one more invoice for 2,500. I'll try to post that using FB 70 4200 2,500 2500. So this is a new customer, new document. If I go and click on refresh, now we can see the balance has reduced to 500. It means that now this customer has to make a payment of only 500 rupees. How? Because initially there was a credit note of 2,000 rupees. I have posted a new invoice for this customer, and when we check when we reduce when we plus and when we do the addition of 2,500 plus minus 2,000, the balance is 500. So what customer would say that? So I will make a payment of 500, and you knock off this and you adjust this credit note, this 2,000 rupees against this invoice number. That is whatever this 2,000 credit note is there, I will not do the payment. You adjust this 2,000 rupees against this invoice because I have already put extra 2,000 rupees here. So adjust that 2,000 rupees to this credit note. So what? And I will only make a payment of 500. So what I will do as the money, that is F dash 28 500. Click on process open items. You can see initial the invoice was 2,500. I have a credit note of 2,000 minus 2,000, and the balance is 500. And here we have entered 500. So 2,000 2,000 plus 500 2,500. I can knock off this invoice. So therefore, and here you can see when the not assigned amount is also zero. I mean, it does we are knocking it off. That is, whatever is the credit note I have there, we have for 2,000 rupees plus the amount 500. I'm applying that against this invoice number for 2,500. And if I click on simulate document, simulate, and just click on save. If I go and refresh, if I go and refresh, there will be nothing here. See, no item selected. If I click on this clear items, you can see this credit note is applied against this invoice number for 2021, document number 2021 and 3007 and 8001. The credit note, this is, I mean, this clearing document is 3007. That is this 2500 plus minus 2500 and minus 2500. It has been cleared using this document number 3007. So the customer did not make a payment of 2500. He has asked us to apply this 2,000 rupees credit note against this invoice, and he just paid the balance amount. Now we did the same thing and the balance is zero. If you hope you're able to follow or understand it what I did it.
Yes.
So this is how you will be using the credit notes, and I mean, and this credit note will come a lot. So usually whenever we do a business with customers, there will always some differences. Like he might say that I was eligible for discount, but you're not given discount, or as per the contract this should be the price and you have charged me. So you will always see multiple credit notes for some value or the other. And what business does it, they always try to knock off these credits against their open invoices. He will not make the whole amount. He will always say that I will pay the balance amount and you apply that credit note plus this amount against my open invoices. And this is how the business will do it. They will go to F-32, the transaction code which I just shown. They will clear, they will enter the open items, they will select the invoices plus credit note and apply the payment, and they will do the clearing. So this is the usual process that the AR team does it for clearing their invoices. Uh, we'll stop here. Tomorrow we will do the tax on sales part. So today we just covered how we can post the entries, the customer entries, that is customer sales, the customer payments. We also understand how we can do the clearing. Plus, in case of credit notes, the same thing apply for your vendors also. So there also you will be creating a debit note, and with the transaction FB65. So just opposite of this there would be, so I thought I will show the credit note here. So there also we will have an option to create the credit notes, and we will do the same settings here. So tomorrow what we'll do, we'll try to understand the tax on sales. We'll try to post entries with taxes. Till now we have not posted the tax on sales. So we are just posting normal transactions. So tomorrow we'll post entries with tax on sales. We'll try to understand that, and then we'll pick up a new topic called as dunning. No, no, we'll start with the advances and the special GL, and then we'll cover the dunning part. So that is the most important thing, dunning. Dunning is used by all the customers. So we'll see what is dunning and how we can do the configuration. So tomorrow, two things: we'll do the tax on sales. We already have the tax procedure. So tomorrow we'll do the tax on sales um, and advances part. That is, if we get any advances from customer, how we can account it. It's just on opposite. We have learned that in vendor side at the vendor level, but we'll also see how we do the accounting for this advances when we get advances from the customers. So those two scenarios we'll try to cover it tomorrow, and day after tomorrow we'll see the dunning part. With the dunning, we'll be able to complete the AR part, and then we can pick up a different topic. So we'll see how it goes. We'll try to extend it on either on Saturday and Sunday, and try to finish the AR part, so that from Monday we can pick up a new topic, and that is either document splitting or asset accounting. We'll try to do the document splitting because now you'll be able to understand the document splitting part. That is why when I try to post invoices before document splitting and after document splitting, you'll be able to see that change, either at the customer level or at the vendor level. So we'll start the document splitting part on Monday. So we'll try to finish the ER part by Saturday or Sunday. Yeah. So any questions before I wrap up the session today?
Sir, can you share FBZP?
I will share it. Just give me a day's time. I will just share it. Today I will share it. I will have some time today. Probably you should get it before afternoon itself. Yeah, I will share it today, and then you can practice it. Yeah,
Okay, sir. Thank you, sir.
yeah. Thank you. So we'll just close the session, and tomorrow we'll continue. Yeah,
Okay, sir. Thank you. Bye bye.
yeah. Thank you. Yeah, bye.